Yo, are we going to go watch the game today? I'm actually super busy right now. I can't hang out. I'm comparing the last month's moon phase to price action. And honestly, after looking back over the past couple of years, I think we have something here, so I can't hang out. The longer I trade, the more that I realize how important understanding cycles truly are. And maybe moon cycles, maybe not. I'll be honest, I haven't done enough research into moon cycles. I've heard people jokingly talk about it. I've also heard people maybe even seriously talking about it. I don't know. There could be something there, don't get me wrong, but over time, understanding cycles has proved to be more and more impactful in my own bottom line. But the thing is, these aren't necessarily predicted the same way that we're used to cycles playing out. The markets are a much more intricate place, and so it's not the same as, okay, the sun will rise and set pretty much the same time, plus or minus a few minutes every single day. Yet you believe some random guy on Twitter when he tells you that he just simply buys the morning flush and he makes money every single day. I mean, come on. I know we're all smarter than simplifying it down to just buying the morning flush. Obviously, that will work sometimes, but it will not work forever, and it won't work all the time. And I think simplifying it down to that degree isn't really fooling too many people. Market cycles are different, just like the sponsor of today's video, Iron Beam.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
Now, I know we have historical data, we have seasonality, and we have all these things that could tell us the market tends to do this, or it does this more often than not during this time of year, that time of year, during when this happens versus that happens. But I'm not super interested in seasonality, because in order to have that play out as an edge in our, I guess, strategy or our accounts, you're more so looking at decades worth of trading or investing, because if the market tends to go up at the end of the year, there'll be years where it doesn't. More often than not, it has, but you could in theory have 3, 4, 5 years in a row where it does not, and so that could hurt you. But then the next 2 decades, it happens more often than not, or out of the next 20 years, it happens 15 or 16 times out of 20, and it makes up all your losses from the past 5, you know? So, like, it just takes a lot longer. And I think we're interested in a little bit more narrowed in, a little bit shorter time horizon than decades. What I'm getting at here is every so often the market will do something. We won't know when, we won't really know how long exactly, but it will do something to where a specific strategy or a type of strategy will work really well. For example, a dip buy approach or a breakout buy approach. That will do really well. The markets will then shift. That strategy won't do really well. And this is exactly what I'm talking about. For example, I trade a momentum strategy, and there are times where the strategy works really well. Over the past year, for example, there were blocks of a couple of weeks or even a couple of months, you can kind of boil it down to, where the strategy worked very, very well. I would see a lot of setups. I would take the setups, and I would win more often than I would lose. Marginally more often than I would lose. But I would also manage my risk in a way where I would make more money in the winter, so it felt really, really good. There are also times when that momentum strategy just wasn't working. It would present, the setup would be there, but we would just not get the follow-through. And then there would be times where we just don't get many setups at all. So as I boil it down, there really were 3 periods. We have a hot period, we kind of have a fake out period, and then we have a cold period where we weren't getting setups in general. So the past 2 years or so, I've been able to identify those 3 periods, and I can't tell you when one of them is going to happen and how long we will stay in that environment. But what I can do is I can manage my actions during the periods where I identify we are in A, B, or C environment. This alone has been a massive game changer, because as I've been able to understand things, I really have a good feel of when my strategy works the best and when it doesn't, and how I can use my own discretion to capitalize when we see opportunities in a situation where my strategy is working very, very well, and then to pull back and not do anything, or to minimize the amount of trades I take or my size when we are just simply not in one of those environments. And if there's one thing you take away from this video, remember that taking advantage doesn't necessarily mean doing something, having a position on. Taking advantage could be identifying a situation or a time where your strategy is not working very, very well and doing nothing or taking risk off the table, which will net you a better bottom line by year end. I will leave the sponsor and links and resources down below. If you want to see what I stopped doing right around the time that I turned profitable, check out the video on the screen and you'll see that. See you guys in the next one. Peace.